Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Sypris Solutions. Is this stock that the retail investors hyping up right now worth investing in? Well, let's find out together. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation in a two-part for both your long-term growth investors and your short-term growth, short-term speculative investors out there. And as always, folks, don't forget to smash that like button down below and consider subscribing and hit that notification bell for like your daily stock reviews and recommendations from an unbiased source. So let's get right into it. So Sypris Solutions is a provider of outsourced services and specialty products. The company offers a range of manufacturing, engineering, design, and other technical services. The company operates in two segments, the Sypris Technologies and Sypris Electronics. Now, the Sypris Technology segment is engaged in the sale of goods and manufacturing services to customers in the market for truck components and assemblies, and from the sale of products to the energy and chemical markets. Now, the Sypris Electronics segment is engaged in the sale of manufacturing services, technical services, and products to customers in the market of aerospace and defense electronics. The Sypris Electronics is organized into the three business lines: the Information Security Solutions, Electronic and Manufacturing Services, and Cybersecurity and Analytics. So let's go ahead and look at the news of the company. The stock price jumped up about 90% to 100% on the news of just one article in particular. Now, Sypris wins defense contract award. Now, Sypris Electronics, that's the subsidiary of Sypris Solutions, announced today that it recently, or yesterday, received a follow-on award from the U.S. DoD prime contractor to manufacture and test electronic power supply modules for a mission-critical long-range precision-guided anti-ship missile system. Production will begin in 2021, and terms of the agreement were not disclosed. Now, the program is designed to meet the needs of U.S. Navy and Air Force warfighters. The missile system employs precision routing and guidance day or night in all weather conditions, and is designed to detect and destroy specific targets within groups of ships by employing advanced technologies that reduce dependence on intelligence, surveillance, and reconnaissance platforms, and GPS navigation in contested environments. The program provides range, survivability, and a technology that no other current system provides, according to the news release. This is a follow-on award for a new program that is currently wrapping up into production volumes, said Jim Long, the Vice President and General Manager of Sypris Electronics. Our customer is a worldwide leader in the development and delivery of advanced technologies for the commercial and military electronics markets. Our technical and operational experiences in successfully scaling early life cycle products in a collaborative way with our customers were key to this win. We are excited to have this opportunity to expand our relationship with this important customer, they said. Now, I want you guys to think about this contract while I go through this analysis and ask the question, can this one contract double and triple the entire company's revenues and earnings? Just keep that in mind as I go through this. So let's go ahead and look at some of the fundamentals. So the company currently has a market capitalization of around $92 million, with the current stock price hovering around $4.55 a share right now, up at its all-time high. The company has already had steady revenue over the past few years, being around $88 million in 2019, and 2020 numbers aren't out yet, but we can project around $85 to $90 million for 2020. The net income for the first 9 months of 2020 was positive $2.8 million, and we can project that the last quarter of 2020 is going to be profitable as well. So Sypris did become profitable this year, so that's a good thing. But are they in a good financial position? Well, debt is not well covered by operating cash flow. Do they have high quality earnings? Well, the high level of non-cash earnings, and shareholders have been significantly diluted in the past year. Now let's look at the valuation analysis. Because Sypris is in the auto components industry and has positive earnings, the PE and the price to book ratios are the most appropriate valuation measures. The price to sales ratio is less instructive than the PE since the company has positive earnings. Therefore, Sypris seems highly valued with a PE value of 53.97 times, one of the highest in the auto components industry. Now looking at the profitability analysis, although losing money on an operating basis, Sypris has typical profitability characteristics for a company in the auto components industry. While it does a better job than medium job converting revenues to profits on a net margin basis. Its gross and operating margins are on par with the industry norm. Now, looking at the growth rates analysis, recently the earnings trend at Sypris has been positive. Over the past 12 months, the company has reversed its prior period's loss to show a profit of 9 cents a share. This performance is especially strong in light of the weaker results posted by the typical company in the auto components industry. Now, looking at the financial strength analysis, Sypris debt to total capital ratio of 45% is in line with the auto components industry's norm despite its increase over the past year. Given that the company's operating profits are 3.91 times greater than the interest payments, there should be little difficulty in repaying debt. So let me bring it back here for a minute. So what did the analysts say about this? Well, the analyst consensus is currently a hold, but that was before the run-up of the price to an all-time high of $7.89 briefly yesterday. Now, going over the few of the analyst reports, the CFRA reports recommends a hold, and that's based on growth and valuation. Model subcategories are the largest positive and negative drivers for their position, but that was before the run-up in the price yesterday. New Constructs recommends investors avoid Sypris Solutions and say they have more downside risk than any upside potential. So my buy, hold, or sell recommendation on Sypris Solutions, here are my thoughts. First off, I currently have no position in this company right now. I'm not a bull or a bear. I don't hold a position. Now, the company isn't a fledgling company, by the way, and there's no chance for bankruptcy. It's just a small cap value company chugging along right now. And there's a lot of noise on social media forums regarding Sypris being the next short squeeze. Even though the news was good, can one expect a 100% increase in revenues and earnings for Sypris from just that one contract from the DoD that was reported yesterday? I say it is extremely highly unlikely that is the case. The stock is currently trading way above the fundamental valuation analysis. I break my recommendation into two parts. So first, for long-term growth investors out there, at the current stock price, my recommendation would be to sit on the sidelines for the next few months until the dust settles. Currently, there's way too much downside risk than any upside sustained potential in the stock price in the near term. My price target over the next 12 months will be between $2.50 to $3 a share, sustained, since those contracts will increase revenues and earnings, but the current stock price is already priced in over 100% increases in future earnings for the entire company for one contract. Now, let me bring the chart up for those short-term investors out there. Now, for short-term speculative investors out there who want to play the meme hype stock short squeeze play, this might be the one to look at. I see a price point of around $5 a share to be able to squeeze the 25% holdings in the shorts, but if the retail investor army loses interest, you will see a lot of short-term downside potential. Now, what happened this morning is an example of profit taking from all those initial investors pumping up the stock to $5 a share up to like almost $8 a share yesterday. There will be extreme volatility in the short term, but then again, I recommend short-term investors hedge your bets, and diamond hands only go so far, folks, because in the end, when the music stops, someone is going to be left with the bag. Let me bring it back here to sum it all up. So I can sum all of this up by saying Sypris Solutions, company is good, stock price way too high. So there you have it, folks. And as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you'd like to hear daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks. Ciao.